Let's bring in Dhivya Suryadevara, the CFO of General Motors, joining us from the headquarters in Detroit. Dhivya, your stock is now trading above $41 a share pre-market. This is an area where that stock hasn't been very often since you guys went back public back in 2010, 2011. What's working right now in the second quarter for General Motors?
Yeah, Phil, we had very solid results in the second quarter of the year, in line with our expectations. And what you're really starting to see is the earnings power of our truck franchise that is starting to show through in our results. And that's really driven by favorable customer reception to our Silverado and Sierra pickup trucks. And we're still in the early days of the launch, and we are yet to roll out our rest of the truck lineup here, and we're excited about the momentum that we have ahead of us. And as the team is now navigating through the headwinds that we see, we're focused on delivering our plan, and we're executing with discipline and with agility, and the team is proud of the results.
Dhivya, a lot of people are worried about what they perceive to be, quote unquote, the truck wars, whether it is Fiat Chrysler being much more aggressive with the pricing and marketing on Ram, whether it's your competitors saying we have to step up in terms of our incentives. Is that possibly going to eat into margins as we look at the truck market over the next year?
As we think about our truck strategy, we're very comfortable with our position here. We went in with a very deliberate cadence strategy. We rolled out our high-content crew cabs first. And if you see the market share quarter over quarter, we're up 3 percentage points in that segment. And we've done this with discipline and incentives and record high transaction prices. So what we're focused on is the strength of our truck.
Dhivya, you may be focused, you may be disciplined, and I know that that is the message that you and Mary Barr are putting out there. But let's be honest, this is an industry where if you've got your competitors knocking a lot off the hood in terms of cash on the hood, that at some point you have to respond. So you're saying that you're not worried about the truck market becoming a little overheated here in North America with incentives?
We're very proud of our product, and we have a very strong product out there. And Phil, you're seeing this in the result. It's manifesting itself in second quarter, despite the pricing headwinds that might have been out in the market. You can see how we delivered, and our market share is up. So what we need to do is to keep focusing on our plan and executing to that, and we will continue doing that.
Quickly, let's talk about China. The equity income that you received from there, less than 50% of what it was second quarter of last year, which is a record quarter there. How worried are you about the slowdown in the auto industry in China?
As you know, it's been a very volatile environment in China. And as you look at the second quarter, we experienced industry headwinds with the overall economic slowdown. There were pricing pressures as well from sell-out of China 5 emission standards going into China 6 emission standards. And when we were executing within that framework, we took down inventory, we had discipline and costs. And as we look for the second half of the year, it's difficult to call the macro environment, but we have significant launches coming up in the second half, a lot of them in the sweet spot and the growing segments in the SUV market. So as we look forward to the second half of the year, we expect the earnings to be generally in line with the first half of the year, despite the headwinds.
Do you expect China's auto industry to be down for the year? I mean, it's down the first 6 to 7 months here. Do you expect that to continue in the second half of this year?
We expect, obviously it's hard to call it, but we do expect China auto industry to be down slightly year over year. But long term, this is a market where we are constructive. We have strong brands. We have a very strong partner. And our strategy in the overall market we're working and we're confident of. So despite the near-term volatility, longer term, we're constructive.
Dhivya Suryadevara, the CFO of General Motors, joining us on a day, guys, where they beat on the top and the bottom line. And on that bottom line, $1.64 a share, 20 cents better than expectations, thanks to the strength of the North American market.